Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Tom Mackenzie. With the cash trade just less than an hour away, here's what you need to know. European futures in the green with global stocks set to hit record highs as investors await today's all-important US CPI print. Meanwhile, Jay Powell reiterates rates could stay higher for longer. Commerzbank lifts its lending outlook after recording its best quarterly profit in over a decade. We will speak shortly to the German lender's CFO. Plus, the Qatar Economic Forum, powered by Bloomberg, enters its second day. We'll bring you conversations with global energy leaders and much more.
Let's check in on these markets then. Fresh records globally. We're looking at fresh records, of course, by the end of the close yesterday on European stocks. Looking to add to that today on a big day, of course, for earnings. But when it comes to the data, the centrality, of course, of that inflation print out of the US. European futures pointed modest gains of 0.2%. Again, building on the records notched yesterday. FTSE 100 looking to add 33 points. The 10-year is currently out 442 on the US benchmark. Of course, we look to see whether there's volatility around the CPI print across the Treasury curve. Euro dollar at 108. Again, they're just 0.1%. Markets today starts right now.
I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
Wednesday, the 15th of May, the Fed chair in Amsterdam yesterday, higher for longer, the narrative. He continues with that message. The market, though, seems reasonably comfortable with what we're seeing here right now. It's ignored the inflation print coming out of University of Michigan data. It's ignored the New York Fed print showing higher data on the inflation front. It's ignored the PPI data yesterday as well, signaling something similar. Today we get US CPI. Today we get US retail sales. Both of those two key pieces of data. How is the market going to take them? Yesterday, the Stock 600 closed at a fresh record high. That's 8 days of gains. Equity markets are on a tear. Is the inflation data going to unnerve us? Because so far, the market doesn't want to hear a higher inflation story from here. It's very comfortable with this disinflation narrative. It keeps looking through the data, saying, yes, but that bit over there is okay.
Absolutely. That's what they did consistently. January, February, March.
Yep.
The markets looked through the strength of that inflation data and said, actually, we're still believers in the disinflation story, as you mentioned, and then focusing our attention on the Q2 and saying this is when it's going to be different. In Q2, things are going to get softer. We're going to see a continuation of the disinflation trend, and so we should get the lowest inflation print year to date today if the estimates are to be believed.
After, of course, 3 straight worse than expected readings that came through. So core expected to come in at 3.6%. This is year on year, of course, versus 3.8% back in March. So 3.6% on core. Interesting in terms of the breakdown. Bloomberg had a really good piece on this in terms of the components to look at, rents and rent equivalent, but also, and this one's for Guy, airfares as well. And there was a little bit of that within PPI, showing airline passenger service costs actually falling yesterday within PPI. So we're looking at, but rent's clearly a factor. A big factor in terms of the services component.
Rents and car insurance seem to be the two things that right now.
Autos insurance,
And the pay of Californian fast food workers gets a specific mention in the Bloomberg Economics Look Ahead.
It does, because the minimum wage has gone higher there. That could feed back through into the wider data. The other thing I would flag, talking of fast food, is what is going to be happening with retail sales a little bit later on as well. That's another piece of data that's going to come out at 1:30. Are you going to end up in a situation where retail sales is weak, and also you have potentially reasonably sticky inflation? That's not a great combination. That's the stagflationary kind of combination that the market, I think, probably would be worried about. But do we end up getting that narrative developing? The market's really keen. Investors are really keen to ignore anything on inflation that they don't like. But the combination of those two, right at the same time...
You're painting a picture of the markets with their fingers in the ears, going, la, 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 la. Everything's
That's
fine.
exactly what it seems to be at the moment.
Just you're painting in a more sophisticated way than I just
I'm
did.
really not sure that I am.
There's the meme.
Talking of retail, so what is also interesting as well, and we've seen this amongst some of the retail companies, is how consumers are adjusting their buying habits. So luxury has been quite strong for some companies. Talking of luxury, here's the pivot then. Burberry, a redhead, and it's not a good picture again for this UK, of course, listed luxury clothes maker. Seeing the first half remaining challenging. That's the redhead for Burberry. as they come through with adjusted pre-tax profits that were amiss on estimates. And this is a company that's got its own idiosyncratic challenges.
Yes, indeed. And we're certainly looking for details around what's happening in China. I don't see a geographical breakdown just yet on the terminal, but expecting those sales to drop by more than 17% this quarter. And overall, another a weak quarter of sales, so a drop down by 1% in terms of retail comparable sales here. This is a new CEO, but back to the wider point about consumers, this sits very much in the aspirational luxury space rather than the top end, and it's there that there's been challenge, that mid-market up to aspirational consumers. There's been a challenge. I
think there's a number of challenges that they face. So I poked my nose in yesterday into the Bond Street store.
Excellent.
Huge.
Don't pretend that's not a daily habit.
It is a daily. I just want to. I do a daily kind of store check in terms of what's happening on Bond Street. It was quite empty. It was quite blue. They're going for big, bright colours in there as well. So Danny Lee, the new designer, Daniel Lee that's come in, it doesn't feel like he's had a full effect yet in terms of what they've got. And I do wonder whether the kind of the idiosyncratic story around the kind of the new designer is still yet to fully play its way through. But the fact that they're talking about the second half not gaining traction with that, I think, is interesting.
And they keep saying, give him time. But the stock is down 52% in 12 months.
It's a massive move. The footprint on Bond Street is enormous. They've got acres of space to sell the stuff that potentially he's going to be bringing. But it didn't seem to have that story yet kind of developing in that store.
I love that you go out on these missions, Guy, to get us ahead of the news.
It wasn't necessarily my main objective of the afternoon, but while there, I felt I needed to do some research.
We all appreciate it. Let's move on to other earnings stories, shall we? We got numbers out of the German banking group Commerzbank. They see full-year net interest income about 8.1 billion euros. That was against an estimate of 8 billion. So an upgrade to guidance coming through this morning, lifting their lending outlook as they beat estimates across a number of measures. Let's get to Bettina Orlopp, the CFO of Commerzbank, who's waiting and can speak to us now. Bettina, really nice to have you with us. So upgrading your guidance then around your lending business, it seems that the run rate in terms of net interest income, if you add up together what you've been doing over recent quarters, people asking whether you could have got to a slightly higher number, perhaps. I mean, what are you expecting? How are you expecting net interest income to develop over the course of the year to give us this figure of 8.1 billion today?
Yeah. So, first of all, I mean, we had a very, very strong quarter, not only with respect to NII, but also with respect to NCI. So, overall, very strong results with a 747 record quarter. And that was clearly also driven by NII, and we have increased the NII outlook because the average ECB rate is now seen to be more at a 3.8% on average instead of 3.5%. We see no more volumes coming in, specifically at the private client side with respect to deposit volumes. And thirdly, mBank has also increased its outlook, given that we do not expect any real rate cuts by the national Polish bank. And yes, we also see an increased deposit beta that plays against it. But overall, we feel very confident based on this very strong Q1 result to lift the guidance from 7.9 to 8 billion.
You mentioned, Bettina, mBank, the Polish unit, so I'll go to that subject next. I wonder, are we able to draw a line under the difficulties you've been having there? Provisions, it seems, increased. You saw provisions rise in the first quarter, I understand, in that particular part of the business. Are issues there finally resolved?
Well, first of all, I think it's important to note that mBank had its strongest quarter ever. If you take the FX provisions aside, they would have shown an operating result of 400 million euros, which is a lot, which also means that they can absorb the burden. So that's the important message. But yes, I mean, the 318 was higher than expected. I mean, we're observing the situation. The strategy is very clear. We want to settle as much as possible with our clients. We are now with approximately 16,000 settlements. And we will continue the story. And that also means that there might be additional burden in the coming quarters. But as said, we expect less than last year. And we also want to get past of the story. The sooner the better. But it's only partly in our hands.
Bettina, good morning. It's Guy. Can I just take you back to the rate story? Is it your sense that the German economy is now recovering? And what kind of a recovery are we seeing?
Well, first of all, sentiment is getting better, which is always the most important first step. And we also have improved our outlook for GDP in Germany a couple of weeks ago. So while we thought at the beginning of the year we would be at around minus 0.3%, we at least are now on a zero. That's still not great, but it's the right trend. And what we also see is that corporates starting, and we saw that already in the past months, that they're starting to think about more investment plans, etc. But the truth is that they do investments, but if they do investments, they do that abroad, which is still good for us as a bank because we are at the side of our clients. So even if they go abroad, we are part of it. But the important thing will be, do they start really investing in Germany? And there we have early signals, but we need to observe the next quarters whether it's really coming.
So any recovery, is the recovery going to be driven by the consumer? What are your consumers doing? Do you see a pickup in consumer spending?
The consumer spending is okay, but it's still cautious. So that's also why we are still at a 0% GDP and not. We do not have a growing economy so far. We'll see how things are developing, but overall. Sentiment is lighting up, and we see it also in the asset quality of our book. It's very good. Our loan loss provisions for the first quarter were really low, and we're very confident also for the next quarters.
Bettina, I'd like to ask you about acquisitions, potential acquisitions. In terms of what you've done, you bought a small asset manager, Aquila. Are you looking potentially at other deals as the balance sheet looks a bit more healthy?
We continue to look, and we basically have, as we speak, we have several things on our table, but it must fit and it must make our story more stronger. And we always said that organic growth is our key objective, but that we would always try to enhance our value proposition by selective acquisitions. And if we see something which fits and which also has the right price, yes, we would go for another acquisition.
Because, of course, there's been a bit more of a pickup in terms of the sentiment around this, whether it's BBVA and its bid for Sabadell or the comments that we heard from the French president yesterday in terms of encouraging cross-border mergers and acquisitions. Would Commerzbank be open, in theory, to a cross-border merger or acquisition?
Well, first of all, our story in the moment is very clear. We want to earn cost of capital. We still have a way to go. We have a clear strategy in place, which should bring us in the direction of cost of capital. And Q1 this year has proven that we are able to earn double-digit ROTE. That's the core strategy. And with respect to cross-border consolidation, we also then talk about bigger deals. It all depends also on the political situation, because we always thought that cross-border deals only make sense when you have a banking union and a capital market union in place, because otherwise you can't do really efficient resource management cross-border with respect to liquidity and capital. And that's absolutely necessary to create value for our shareholders. And that's our objective. We want to create value for our shareholders. And this is also why we return hopefully more than 70% of this year's net income to our shareholders.
OK, Bettina Orlopp, CFO of Commerzbank, thank you very much indeed, raising their outlook in terms of the full-year view on net interest income and a beat in the most recent quarter. Thank you for your time.
Yeah, let's move on to what is also coming up today and give you a rundown. 10 a.m. UK time, Euro area Q1 GDP hits the Bloomberg terminal also at 10 a.m. London time, we'll get Nigerian CPI, 1:30 p.m. UK time, US CPI, retail sales data. That's the big macro focus of the day for markets. Later, we'll get Cisco earnings, of course, as well. And throughout the day, central bank policymakers from the Fed and the ECB will be speaking at various events.
As we build up to the CPI and the retail sales number out of the United States as well, we're going to be watching what is coming out of the Qatar Economic Forum, powered by Bloomberg. That very much continues today in a little over an hour. you are going to be brought a special energy panel. That's going to have the Qatar Energy Minister and the CEOs of Total and ExxonMobil. Looking forward to that conversation. Up next, an exclusive interview with the Euronext CEO, Stefan Büchner. This after the company's latest earnings print. You want to join the team? You want to join in these conversations? You are more than welcome. Join us on IB Plus BBTV Go. IB Plus BBTV Go. That's where you'll find us. This is Bloomberg.
I do worry that the structure of the equity markets, particularly in the United States, but this is true all over the world, are bringing fewer and fewer public companies, and that is concerning. That
was, of course, the Goldman Sachs CEO speaking to John Ferro. David Solomon talking at the Choose France summits, which took place at Versailles at the beginning of this week. We've had numbers out from Euronext this morning. Generally, they've beaten expectations. Cost control remains a key focus. Obviously, the integration of Borsa Italia, etc., a key focus for this business. We're joined now by the CEO of Euronext, Stefan Büchner, joins us out of Amsterdam. Stefan, thank you very much indeed for your time. David Solomon at Goldman Sachs is a little concerned that public markets are not delivering on their potential, that we are seeing a lack of IPOs, that we're not seeing a big move back into public markets by corporates. What is your answer to his concern? Are we not doing enough here to make public markets attractive?
Well, what I can tell you is that the momentum is changing in Europe. There is a very strong awareness by all the chain in the industry, including leaders and policymakers, to switch gears and to accelerate what is now branded as the Savings and Investments Union. I mean, it's clear that the paradox of that we experience today of 35 trillion of household savings in Europe, not invested in European equity, but invested in government bonds and in foreign equities, is going to be adjusted. I expect fundamental changes in terms of incentives to drive household savings, and also to change prudential requirements towards European equity. This is about to happen in the next months.
So that's going to happen. So, OK, talk me through the impact of what that will look like for Euronext, because at the moment you're in consolidation mode. At the moment, the market is focusing on cost control and integration. That seems to be the narrative that is driving your stock at the moment. How big a shift should investors in Euronext expect if we do see some of these reforms coming through? How different a business would you be if you did see some of these changes?
Well, the reality is that the top line is growing, as we announced it yesterday, by 8%. This is the best quarter ever for Euronext. So we are growing. Of course, we have a traditional, unique cost control. Just to illustrate it, our cost base was reduced by 2% last quarter, despite inflation that we are all experiencing. So the company is very healthy and is delivering very, very strong results. But on the top of that, what is true is that we have built now a form of leadership in equity trading and equity listing in Europe, and liquidity goes to liquidity. And it's clear now that when the average daily volumes traded on Euronext are about 10 billion euro, which is more or less twice the size of the London market in equity, when the aggregate market capitalizations of companies listed on Euronext markets in Europe are about 7 trillion euro, again, twice the size approximately of the companies listed in London. We are in a situation where the European markets are Euronext markets, and therefore liquidity will continue to aggregate in our markets. And any movements that drives savings, either institutional or retail, towards equity markets will be extremely good news for the performance of our cash equity trading business.
Stefan, what do you think? What is your reaction when you hear the likes of TotalEnergies CEO flirting with the idea of moving the listing to New York?
Well, I think the situations of each company is extremely different. There is a London issue where in London there are debates about multiples gap or valuation gaps or liquidity gaps between London and New York. On the continent, there is no liquidity issue because, as I've said, the liquidity is there. And actually, in the case of Total, the liquidity is massively better in Europe than in the US. But for certain specific segments, there are valuation gaps and there are multiple gaps. In the case of Total, it's true that the peers of Total enjoy better multiple valuations in the US because the investor base in the US remains more friendly to oil and gas than the European investor base, which is more tempted to follow ESG requirements and therefore has a reduced appetite for oil and gas. That translates into different multiple valuations. And that's a fact. Now, what we are trying to do is to help Total to capture more US investor money while remaining listed in Europe. And I'm confident that we will find technical solutions for Total to remain listed where the liquidity is, while at the same time capturing the interest of investors where those investors are. And that's not complicated to connect investors who like oil and gas with an oil and gas company located where the liquidity is. And that's what we do. So each company has a different story when it comes to the European continent.
Stefan, you've mentioned London a few times. How confident are you that Euronext, that Europe is going to continue to drive market share and take market share from London? Is that a structural change?
It is a structural change because London used to be the largest financial center of the European Union and everybody liked it. Since Brexit, London is the largest financial center of the United Kingdom. It's an offshore platform. It's a great place for Forex, for clearing, for various asset classes. But when it comes to equity, which is probably the asset class which is the closest to the real economy, supervisors, issuers, investors like the equity market to be where the companies are. And that's true that for listing and equity, well, for equity listing, for equity trading, the situation is fundamentally different and is not going to be reversed.
Isn't the competitive threat, Stefan, really, though, with the United States? And we've talked about Total, but thinking about, and away from that specific story, but broadly around the push to delist in Europe or the temptation to delist in Europe and go to the United States, do you think higher executive pay in the US is one of the driving factors?
I mean, I'm not in the boardrooms of the companies, and mainly, again, this is more a UK issue than the rest of Europe issue. Yeah, that may be one part of the equation. I mean, I'm not comfortable commenting that because I don't know what is the relative weight of those decisions.
Okay.
But it's true that it is the case.
OK, thanks so much, Stefan. Thanks for joining us. Stefan Bujner, the CEO of Euronext, joining us there with the latest on the markets. It is a conversation that will continue to happen, isn't it, around the competitive threats for European listings over in the United States.
The competition seems to be with London at the moment. It feels like, if you're talking about Total, the competition is definitely with the United States. Yeah. Maybe that's just an ESG issue, as Stefan was maybe alluding to. The bigger question is, if you could get all of these savings out of European banks and into equity markets, A, that might actually kind of create some wealth effects around Europe, and B, would certainly be good for his business.
That if, a huge if. There's a lot. That if is doing a lot.
We've been talking about this for a long time.
Yeah, and this was what Emmanuel Macron was talking to John Micklethwait about as well at the beginning of the week. So it seems corporate execs on the same page across Europe with the politicians. More to come on the markets. We're back at QEF as well for the Qatar Economic Forum, powered by Bloomberg. That's coming up shortly. This is Bloomberg.
Welcome back. You're watching Markets Today. The big day has arrived. We've been waiting for the CPI print all week. Today we're going to get it. 1:30 here in the UK is when it's going to drop. We are also going to get retail sales at the same time as well out of the United States. These are two really big numbers. Equity markets have been on a tear into this data, which is in some ways surprising given the fact that we've had other inflation prints which have been a little kind of less benign. But the Stock 600 closed at another record high yesterday. This is what futures are pointing at. We've had 8 days of gains. That is the longest streak for European equities since November 2021. So we are on a proper tear here in terms of some of these equity markets that we're seeing here in Europe. Banks, and we've seen two big banks reporting numbers this morning, ABN AMRO and Commerzbank have been the main beneficiaries. The net interest income story continues to be a big driver. Rates aren't coming down as quickly as we thought.
Yes, it was really interesting with Commerzbank how to phrase questions around net interest income, because as she highlighted to us, that upgrade we've seen in net interest income that they announced this morning is driven by an assumption of higher rates for longer, as you say. Yeah. But then at the same time, we're having conversations about the ECB cutting rates at the end of the year. So you've got the higher for longer narrative as a sort of baseline, but then towards the end of the year, pivoting downwards in rates and how they impacted by that.
Maybe that ties into what we saw in Allianz, where PIMCO saw inflows of 32 billion after, of course, a number of quarters of outflows. So inflows picking up again for PIMCO, maybe on expectations from investors that even if rates are at 2-3 decade highs, they're not going any higher from here. They do have a bit of certainty in terms of the trajectory going forward, in terms of at least no further hikes, and therefore they start to put money to play a little bit more proactively, because certainly PIMCO seems to be benefiting from that inflow story.
It's fascinating that maybe you're getting more of duration play here in Europe, less so at the front end, less so in the United States, where the front end seems to be still the kind of the most active area. But the narrative that certainly seems to have come out of the last few days in the conversations we've been having has been that basically there is this idea that the Fed doesn't go this year, doesn't deliver cuts. We saw two guests of ours yesterday talking about this idea. And if the Fed doesn't go this year, the ECB is going to be quite limited in its capacity to cut rates, and maybe that's starting to be factored into the thinking now. Yes, the ECB is going to be cutting, but not by much.
Yes, and I think both of the guests yesterday who had that view that the Fed won't go this year, they thought the ECB will still, but not by as much as they would have done if the Fed had been cutting. So maybe 2 cuts from the ECB. So there's this sense that you can afford to diverge, and that the Fed, you're not just another Fed district. You can afford to do your own thing, but there will be feedbacks that will come back.
Yes, exactly. There are certain constraints that loom from, of course, Jay Powell and the Fed. To the earnings story, and some interesting comments coming through from the CEO of one of the biggest hotel groups. This is Accor. Sebastian Bazin speaking to our colleague Jemana Bazecci at the Qatar Economic Forum. Very upbeat about the Middle East. Take a listen in.
The fastest recovery has been in the UAE. Most of it has to do with demand and travelers coming to Dubai and enjoy the sun and many other things. Has to do also with financial resources. A lot of investment are being made from the UAE, from Saudi, from Qatar. I was really thinking that Egypt will have basically very few tourism coming to Sharm el-Sheikh and so forth for December. He was actually packed, and that was a couple hundred kilometers from Gaza. So it's I need to be very humble about it. I need to navigate through troubled waters, but people want to travel, people want to meet people, and the best thing against war is for people to interact and to discover somebody else's culture.
So that last answer was on a question around geopolitics and some of the risks that he'd seen, because he was very upbeat during that interview with Jemana, and then she came out with that last question around geopolitics. He says that is the thing, that is the key risk for the business. They're adding, though, within that region, within the Middle East, 150 additional hotels. They're seeing a lot of growth potential within the Middle East.
It does stand out, doesn't it, that they see within that region that there are geopolitical concerns, clearly, but then they also see it as such a growth area. The region is large. There seems to be room for 2 narratives going on here.
In some ways, the geopolitics have driven the positive performance that maybe you're getting out of some of the GCC countries, particularly Dubai. You think about every time you go to Dubai, there are a lot of Russian tourists that are there at the moment. That has changed the feel of the place, certainly, over the last couple of years as a result of the Ukraine war. The place feels like it is really buzzing at the moment. There's a lot of money flowing in. You look at what's happening with the real estate as well. That story is really positive. Dubai has been very cyclical, though, and it's going to be interesting to see just how sustainable this current recovery is. But yeah, no, it's a really positive performance. He's also got the Olympics coming up.
Which he says will be extraordinary.
Of course they will be extraordinary. I wonder whether Taylor Swift's concerts in Paris will have more of an impact than the Olympics, though.
Oh,
we're getting a sense of Guy Johnson, though. Bond Street, when he's not on Bond Street, he's in Dubai staying at 6-star hotels.
He never misses a Taylor Swift reference, I can tell you that about Guy
Absolutely.
We're going to get some... Have you got tickets yet?
No.
Playing at Wembley? You can come as my +1.
I was about to say, you do have tickets.
My wife may not be too happy with that, but we've changed it up live here. It's on record. The Olympics, he's a mass potential for the Olympics. Interesting, he said, and he said, I should not say this, but price is actually not skyrocketing in terms of that demand. So he's saying massive demand, 80% booked already amongst their hotels in Paris. But he says, don't worry, prices aren't skyrocketing. They're not going through the roof. And he said, I've tried to tell the team and the company to keep prices reasonable.
Nice that he prefaces that by saying, I shouldn't say it, as if he's just, no one's listening, so it's fine.
We'll see just how good they are.
We'll see how high. Well, it's all in the last 20%, isn't it? I mean, you book on a curve for these things, don't you? And I imagine all the big money gets made last minute.
Last minute tickets. Are there any available? Tom's got the tickets to Taylor Swift. If you're looking for a +1, maybe he's the person you should be talking to. Right. What are we going to do next? We're going to take a look at stocks to watch. Burberry out this morning. The luxury goods company. First half remains. Talking about the first half remaining challenging. We'll talk about the second half remaining challenging. To be honest, China remains a big factor here. New designer coming in, maybe not delivering just yet for the business. We'll talk about that. That's coming up next. All of the stocks you need to be focusing on. We'll look at those next. This is Bloomberg.
Welcome back to Bloomberg Markets today. It is the second day of the Qatar Economic Forum taking place in Doha. Let's go live to Bloomberg's Jennifer Sabasaja, who's at the event with a guest. Jen, good morning.
Yeah, good morning, Anna. Joining me now for an exclusive interview is Yvonne Manzi Makolo. She is the CEO of RwandAir, also here, going to be on stage with me in just a few minutes. So, Yvonne, we don't have that much time, but of course, Qatar and Rwanda, very important partnership. I mean, what's been so key to this successful partnership, would you say?
Well, I think the key thing is there's a lot of goodwill between the two countries, which is translating very well on the commercial side. So we are working on the partnership with the airline, where Qatar is looking at taking 49% of RwandAir, and the airport as well, the new airport that's being built, where Qatar is the majority shareholder at 60%. So very exciting projects that we're working on.
How close is that to being done? Because many people have been anticipating that airport.
Well, we're looking at a completion of 2027. There's been a bit of delay due to redesign. Originally, it was a much smaller airport, but when Qatar came in, there was a whole redesign process. COVID slowed things down, but we're eagerly anticipating 2027 for completion.
And I wonder, when we think about things that are potentially getting in the way of RwandAir being at its capacity, I mean, a lot of people are talking about planes, right? Boeing and Airbus. How has that affected airline and aviation, you think, on the continent, would you say?
Well, it plays a big role, because all of us are scrambling for the few aircrafts that are available. There's been a lot of delays in terms of delivery, but not only on new aircrafts. We're having a lot of supply chain challenges in terms of getting spare parts. So when you have a technical problem, the aircraft is on the ground for much longer than it used to be. So we're really hoping that this issue is resolved as soon as possible, and the supply chain challenges are resolved, and the pipeline for new aircrafts is open once again.
Do you have confidence that it will be resolved sooner rather than later?
I do, absolutely. It has to. It has to, for aviation to continue growing. It definitely has to be resolved, and I'm confident that it will be resolved.
Do you anticipate then, I mean, when we think about intra-Africa travel, it's already a bit botchy. I mean, how do you improve it in the interim while we are waiting for, these other manufacturers to fix their issues?
Well, for intra-African travel, it's a number of challenges. We have the cost of operating within the African continent, which is much, much higher, sometimes almost 50% higher than it is in the Middle East, which makes ticket prices very, very expensive for our citizens. Then we have infrastructure challenges where airports are not being upgraded. We have challenges with visas. Traveling between African countries is a big problem. We have skills challenges, so a lot of focus has to be on training skilled personnel to run these airports and airlines. So it's quite a number of, and the closed skies. We've been talking about opening up our skies through the Saturn program, and this has been delayed, but we're hopeful that once implemented, it will be much easier to expand aviation within the African continent.
Has the regional conflict in the Middle East potentially had an impact on that as well in terms of opening up the skies?
Well, that definitely plays a role, but we work around it. Any challenges, geopolitical challenges, we anticipate that and we try to work around it. It has been a challenge, but aviation is very resilient, so we bounce back very quickly.
Do you think RwandAir recently announced that they were expanding their daily flights to London from Kigali?
Yes.
Does that expansion continue, or are you looking to other places in Europe to have daily flights? Is the demand also there?
The demand is definitely there. We've seen recovery from COVID. We're back to pre-COVID numbers. We've grown the London flight from 3 flights a week to daily now. We are looking at expanding, especially in the African continent, because the potential is so huge there and it's really underserved. So we're looking at opening quite a number of other routes within the African continent to feed our long-haul routes.
What are some of those routes?
Oh, we have, of course, the London route. We have Paris, Brussels, Dubai, Doha. Those are our main trunk routes. So the focus is really how do we open up the African market to connect Africa to the rest of the world.
Yeah, and I know you've also spoken about Asia as well being very important for the long-term plan.
Absolutely.
We have to leave it there. Yvonne Manzi Makolo, CEO of RwandAir. Yvonne, thank you so much. I'll see you on stage.
Thank you.
And I'll send it back to you guys in the studio.
Jen, thanks so much. Bloomberg's Jennifer Sabasaja at the Qatar Economic Forum in Doha. We'll be back there shortly. Plenty more to come, in particular around the energy sector. We'll have a panel of energy executives later on in programming for you. Let's get back to the big picture story around rate expectations. We heard from Jay Powell just yesterday in Amsterdam. Let's refocus in on what he had to say.
The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work.
That was Jay Powell, of course, of the Fed speaking there. He was also joined by Klaas Knot of the ECB, who was also speaking at the same event. Let us get to our Markets Live executive editor, Mark Cudmore, who's with us now to talk about the markets in 2 minutes. Mark, so the comments we heard there from Powell, setting the stage, I suppose, for the CPI print later. That is the big market focus of the day. What are you watching for?
Yeah, I think this is an interesting CPI print. It's been very much hyped, but I think it's asymmetrically skewed for lower bond yields afterwards and hence a softer dollar. I'm not making any particular guess on which way the print's going to come out. If a gun to my head, I would say that it might be stronger than people expect. But I think that basically if you get a strong inflation print, you get a little bit of a pop-up in yields and a little bit of a bounce in dollar. Whereas if you get a soft print, you can get a real sharp drop in the dollar and a sharp drop in yields. Why do I say that? Well, because we've now reached the point where the Fed has even acknowledged that, hey, inflation is sticky. It's not going to the plan they laid out before. However, the Fed's super dovish reaction function remains very strong. And this means a soft print gives them the excuse to cut rates, the cut that they're desperately willing to make. Whereas if it's a high print, well, it's kind of going, look, we said it's not coming along yet. We'll have to wait for more data. Maybe a cut will come later on this year. And it doesn't change the narrative as much.
OK, and let's talk about something else that's fairly topical. We've seen big moves in copper, and a lot of people talking about short squeeze in copper. And when you see a short squeeze, there's always the possibility it doesn't end well. What are you watching when it comes to this particular metal, which is topical because of M&A news flow as well?
Yeah, I think obviously, you know, the BHP Anglo story is really kind of tying into this. Look, the longer-term fundamental picture for copper is very strong. I'm a bit of a macro tourist when it comes to metals, but all my team kind of assure me that the longer-term demand-supply picture just, you know, supports that kind of fundamentally bullish stance. But the dynamic at the moment is both the news flow and the M&A story and some short-term kind of headlines around supply and Chile raising prices. But it's really about bear squeeze here. This is about squeezing, just a massive kind of positions in the market. And therefore, I don't think that this current kind of spurt is sustainable. When it ends, I don't know. Some of my team are a little bit worried that if it does collapse suddenly, there might be a ripple effect across the broader commodity set.
I wonder whether there's a kind of inflation read across as well that we maybe need to think about. Mark, stick around. We're not done with you just yet, but we do need to bring in Rachel Evans, Bloomberg's managing editor for FX and rates for the US and EMEA. Good morning. Mark talks about the asymmetric kind of risk around the CPI prints and what we're going to get later on. We're also going to get retail sales, which I think is probably not worth ignoring. Talk Talk to me about, though, how the market is thinking about inflation, because we had UMich on Friday, kind of signaled that inflation was reasonably sticky. Market ignored that. You get the New York Fed survey. Market ignores that, despite the fact that inflation looks like it's ticking up in that survey as well. PPI, market ignores that one too. Even if we get a high print today, is the market just going to look at it and go, oh, yeah, but there's other reasons that we can maybe see this as a glass half full kind of picture?
I think it would be very difficult for them to shrug off a truly hot print.
Okay.
I mean, we've had Powell come out and sort of say that the print yesterday on PPI was mixed, not hot. So giving themselves a little bit of wiggle room to see kind of like the positives in that report. And I think there'll be a lot of kind of like passing CPI to kind of find the positives as well as maybe any headline negatives as well. I mean, there's been a lot of focus on revisions when we've been kind of looking at the more recent reports. What has it been revised up? What has it been revised down? So I think there'll be a look kind of like beyond just the headline figures. But you're right to say, like, the market is really primed to rally right now. And I think that just speaks to the huge backup in yields that we saw kind of sort of heading into the end of last month. We've really turned a corner since Powell spoke after the Fed meeting, since that jobs report sort of right at the beginning of May. And I think that really kind of just has set the tone that the market just wants to rally. It's been looking for that positive news. And, you know, Powell speaking at the last meeting and saying that hikes are not on the table, that was enough. You know, it wasn't that cuts were around the corner, but hikes were off the table. That was enough. So I think people will be looking to CPI to just, again, reassure themselves, we're done with hikes, cuts are coming. It might not be tomorrow, but we're on that path. Yeah.
OK, so it's the red hot and fully confirmed higher CPI print that could throw things off course, however you define that when you lift the hood. When it comes to what that means, then the read across, let's assume it comes in line with estimates or below. The read across for the dollar then, and in terms of how much is currently priced in and how that ties into the Treasury market as well.
Yeah, I mean, so we've been seeing people taking off a lot of risk over the past kind of couple of weeks. It's really been this unwind of this big short in treasuries, unwind of some of these long dollar positions. So people are much more neutral than they have been for quite a long time. But we're starting to see people kind of thinking about, around this particular release, building up positions that would benefit if the dollar were to fall. Obviously, the dollar would fall if people think that the Fed is going to cut, if inflation is coming in sort of easier than expected. So I think we're sort of at that point where we might be kind of seeing a turn, really, in expectations, a turn in yields, a turn in the dollar. And really, people are looking to this inflation print to kind of give them the go-ahead to start loading up on bets, bullish bets for the Treasuries market to keep on rallying, you know, bearish bets on the dollar.
So, Mark, the dollar maybe starts to sink a little bit. Does that... Walk me through the implications of that for the rest of the world. There's been obviously a huge amount of pressure on the BOJ, to a certain extent a pressure on emerging markets as well. We've seen obviously a lot of money being made in terms of what we've been seeing with emerging market dollar-denominated bonds. Walk me through the implications of a weaker dollar trend that starts to emerge. How do I make money off that?
Yeah, look, so first of all, I do think that we're kind of at the start of a weaker dollar trend. And what does that mean? Well, it's an easing of financial conditions to the rest of the world. So this should suddenly feed the nascent narrative of emerging market stocks, the rest of the world kind of suddenly doing as well, or if not even better than kind of S&P 500. This idea that the world, maybe it's time to re-leverage back into the rest of the world. I don't want to call the end of US exceptionalism in a longer term period, but maybe for us to take a break of that theme of US exceptionalism. And it could actually be a turning point there. But, we're going to kind of re-leverage back into the rest of the world. It's good for EM. It's an easing of financial conditions. They're probably the main takeaways. And one final thing, Guy, you mentioned retail sales. At the moment, everyone's talking about CPI. I actually think retail sales might be the thing we're talking more about by the end of the week. I think, as Rachel outlined, we might kind of fit the CPI data to our narrative unless it's a real shock, whereas retail sales might be the one that changes our thinking.
Yep, the consumer, the key driver of the US economy, any sign of weakness there, any sign of the inflation narrative hitting that consumer will, I think, probably be taken reasonably seriously. They both come out at the same time. We'll see which one is more important. Rachel, nice to see you this morning. Thank you very much indeed. Rachel Evans, Bloomberg's FX and Rates Managing Editor for the US EMEA, as well as our Executive Editor over on MLive, Mark Cudmore. You can get Mark and the rest of the team's thoughts, MLive Go, on your Bloomberg terminal. Stocks to watch, Joe Easton, over to you.
Morning, guys. So we're starting with Burberry, and we've got some really downbeat comments coming from the UK luxury firm today. This is the quote that's getting most attention. They're saying that in the context of a still uncertain environment, they expect the first half to remain challenging, and they say that the issues that they're trying to address won't actually be fully tackled until the second half of their fiscal year. And some pretty shocking numbers in the report. Over the past year, adjusted pre-tax down 38%, comparable retail sales are also in negative territory. But the thing that stood out to me is these analyst ratings. 17 holds among all of those. Pretty much nobody willing to take a punt on this stock, even though it is down by around 50% over the past year. It's looking pretty negative again on Burberry today. Then in terms of Allianz, this one is looking more positive. The German company doing really well in property and casualty insurance. The earnings there are up around 10%, as we've got on the screen here. And also PIMCO, the big bond arm of the business, adding around 32 billion euros of flows over the last period. They say that bond demand is increasing as rates are expected to have peaked, so that could potentially be a positive. Over a 1 year, we already see 26% gains, but we are looking pretty good in terms of an opening price on that one this morning. Then we're going to look at Neste. This one is probably the worst one, a bit of a shocker standing out to me this morning. Renewable product sales margins are downgraded at the Finnish maker of energy. This isn't Nestle, the maker of Kit Kats. Don't get your Kit Kats and diesel mixed up. So this company is saying that their diesel prices are declining. That's hitting the margins and also their renewables as well. Morgan Stanley expects a very negative reaction, missing consensus by 36%. Could be a weak one over in Helsinki today.
OK, Joe Easton, our equities reporter, on some dining tips there as well, at least avoiding diesel for Kit Kats. Thank you, Joe. Of course, we count you down to the open. Futures pointing higher after 8 straight days of gains. This is Bloomberg.
Two minutes to go until the start of equity trading here in Europe. We are 8 days higher. We've seen records after records here in Europe. Europe certainly feels like it's got a lot of momentum. We haven't seen this kind of a level since back in November 2021. So we are pushing higher. Equity markets on a tear. That looks like it's going to continue this morning. But we are building up to some big market events that are coming up a little bit later on. Retail sales and CPI, both out of the United States, could confound this market. The story has been that actually inflation isn't going to be a problem, that we are going to disinflate, that we are going to see rate cuts ultimately coming through. Equity markets have liked that, and we've been on track. So what is going to drive us today? Doesn't look like it's going to be Burberry. Burberry looks like it's going to see a sluggish start to the day. But the banks maybe a little bit more positive.
No connection to your visit to one of their key stores in London.
I am not a lead indicator.
No, you're not a lead indicator on luxury. Okay.
I don't actually spend money. I just look.
He's just window shopping for the purposes of research.
It's a glamorous Tuesday afternoon.
He does it so we don't have to.
Banks could be pretty decent. The earnings come through pretty strong. Beats for ABN AMRO, beats for Commerzbank, and of course we have the story as well around the fact that banks as a sector are the leading performer. It's the best performing sector so far year to date. I think gains of around 20% across Europe.
Really interesting yesterday. We saw the car sector doing pretty well, but one of the standouts there was Volvo Cars. And joining a few dots here, it seems some of the team lumping this in with the GameStop frenzy, because some of the most shorted stocks in Europe are also joining in with this. And Volvo Cars, 20% of shares out on loan, and it rose as much as 8% in session yesterday.
If you are short of anything at the moment, you've learnt the lesson from Gabe Plotkin. You do not... as soon as there's any indication that this kind of strange retail story is getting traction again, you cover them. You have to have learnt that lesson. And, yeah, you're right. You're seeing it across the board. Let's see what happens this morning. First thing, as we say, we're on a decent run here for European equities. Does that continue this Wednesday morning? Early indications are at least that we do have some green on the screen in terms of what we are watching. Euronext also out with numbers late last night, so we are seeing that having an impact this morning. It is rising this morning. In terms of the percentage story, it is the biggest gainer. We are, though, seeing... I just want to double-check before I talk about this.
Oh, is this ex-div?
I just want to check my ex-divs.
I have a list. Hit me.
Anna is prepared in terms of what we're seeing.
Dan Till is keeping us honest.
Standard Chartered.
You're OK there? Safe?
I'm OK there. That looks like it's down really... sorry, let me just double-check what we're seeing here. This isn't Standard Chartered, so sorry, excuse my...
We've got Santander
Polska.
Yeah.
Looks like it's down really sharply, which I need to double-check.
OK. Well, I'm not sure. I haven't got a full list. The ones I wrote down, Equinor, Deutsche Börse, ASM International, Rheinmetall and Hugo
maybe
Boss.
Start down these rabbit holes to make sure we're doing well. But banks, big focus. Yeah. Euronext, it is ex-dividend. The producer, the voice in my head tells me all I need to know. The production team are better prepared than we are. Maybe they don't have to do it live on television.
Commerzbank was good in terms of net interest income and the outlook as well for the full year. ABN AMRO as well coming through with a beat. We'll see what the reaction is. We need to pull up ABN AMRO, actually, because there was concern, at least flagged by some in a note earlier this morning. Maybe there was going to be a bit of pressure despite the beat there. Commodities is really interesting as well. We've been talking and thinking about copper, but across the commodity space, you're seeing a pickup today if you strip out, at least for the moment, iron ore. Oil prices are up around 0.7%. Copper at 10,220, up a full percentage point so far. And, of course, that's benefiting Basic Resources and the FTSE 100. Basic Resources is the leading sector right now, up 0.8%. On the downside, it's consumer products, and Burberry will be part of that story.
Yeah, most sectors are in positive territory, though. So a decent day for stocks, up by around 0.4% overall. To your point, then, Tom, only two sectors lose ground: consumer products and services, personal consumer discretionary, and grocery stores, if I can make sense of all of those acronyms. Yeah, Carrefour, Ocado, those businesses losing a little bit of ground this morning.
They do make it easy, don't they, with the sector story? It's kind of, what's in that? What is that? Kind of, what do I need?
CP&S, PCD and GS.
Yeah, precisely. They just roll off the tongue.
Absolutely.
LVMH is a little softer this morning. Burberry is down. That certainly is a story that we'll come back to a little bit later on. But in terms of the points drop, we are seeing LVMH, Allianz and Compass adding the most on the downside. But Novo Nordisk is actually having a fairly decent day once again. That charge continues. It's up by another 0.8%. Is that still the catch-up trade? I think we've probably maybe moved on a little bit from that. Let's show you what is happening in terms of the core six around Europe. The story looks a little bit like this. We're watching what is happening with LVMH. It is a little soft. Nestlé, not Neste. I wonder whether people make that mistake, really. Down by 0.2% as well. But elsewhere, Novo's up, Ferrari's backing up as well. 0.6% on the upside for ASML. So we are continuing to rise in terms of the technology sector.
Yeah.
But we're coming towards the end of the earnings season. The earnings season seems to have been good enough to continue to drive European stocks higher. Has that been the prime driver of late? I wonder whether it's actually more the yield story. We focus on the individual earnings stories on a day-by-day basis and then try and aggregate it and kind of take something away from it. But it does feel it's been this kind of yield drop over the last few days that's been the primary driver of European
As Rachel
equities.
was saying to us earlier, stocks just want to go higher, it seems. Investors just want to do that. We were given some wise words about not confusing our gas and our Kit Kat when it comes to Nestlé and Neste earlier on by Joe. And Guy, you've been through what's happening with Nestlé, but Neste is a big mover as well, falling by down by 13% right now. It cut its renewable products sales margin guidance. Joe taking us through some of the details there. So that's where we are on that individual name. And talking of Joe, I believe he's standing by ready to bring us those individual stock movers. So let's get to that now, Joe.
So Neste, that is the big dropper, as you said there, Anna. It is down 13% now in Helsinki, on track for its lowest close since 2005. They've downgraded their diesel and renewable energy margins for that stock. It's having an absolute shocker over on the Helsinki exchange this morning. And speaking of downgrades, we did get a forecast cut from ThyssenKrupp, the maker of steel. This one dropping over in Germany. We're down 3.6% on that one. But we're getting Grifols coming up. They have, of course, been the target of the short seller report. They've got a cash update out today, and it's looking pretty positive over in Spain. So we're seeing a gain there. But that one on Neste without an L, importantly, as we mentioned earlier, that one is down 14%, really the biggest mover we've got today. And then we'll look at the UK earnings. We've got a bunch of them. There's Burberry opening down almost 4% at the moment. They have reported some really weak numbers and, of course, warned about the first half of the year remaining negative as they attempt to turn around the business with their new creative director. And you mentioned Compass in the build-up there. It's a massive company worth about $50 billion. I always forget how big that company is. And the numbers look strong. It's airport catering mainly, but it is coming down, a potentially a high valuation weighing on that one. Imperial Brands, they've cut their dividend, but the stock coming up, it's had a rough time given the the UK clamping down on teenage smoking and vaping. That's been an issue, so we're seeing a bit of recovery. And Experian. Now, this is interesting because the rising rates mean fewer people are doing credit checks, so that stock's had a really bad run, but numbers out today, again, reassuring. We're seeing it gaining on the London market today. Then sticking on the financials themes, we'll check in on some of those banks. There's ABN AMRO now. That one's getting pretty slammed this morning. Now, we did have a jump in that one earlier in the week when the Dutch government announced they won't be going through with this share buyback tax, so potentially we're giving up some of those gains today, but that is a bigger move than I expected. So ABN sharply lower in Amsterdam. Commerzbank more straightforward. They've maintained and even upped some of their net interest margin guidance, but that one, again, it's had a decent run, so it's not doing too much. And Allianz slipping. Most of the numbers were strong, particularly on PIMCO and also the insurance. But again, looks like a weak move. Maybe some people positioning for that US CPI. That'll be the key thing today, won't it? Then we'll look at some of the movers. We had another update from the London Stock Exchange yesterday. They are announcing another big sale by the former Refinitiv and Thomson Reuters investors. It's more than 1.5 billion, according to a statement. We did get a price on that, but it wasn't actually a very low price. It wasn't too much of a discount, so it's pretty much unchanged, almost actually up 1.6% now then for that one. In terms of your ratings changes, we got supermarkets and swimming pools today, a bit of a strange combo, but we got Carrefour, you mentioned earlier, that's down 3%. This is an underweight at JP Morgan. They reckon that the declining food price inflation will continue to weigh on that one. And then in terms of your swimming pools, we got Fluidra downgraded over at Banco Sabadell, coming down 2%. They're saying there's oversupply in that market. We don't tend to look at that one too much, but Fluidra dropping over in Spain today.
OK, Joe Easton, thank you very much indeed with the check on some of the key movers. On ABN AMRO, pretty interesting and a little bit of a counterintuitive move in terms of the stock price, at least on one level, because in terms of the first quarter, net income coming in comfortably above the estimates, around 674 million. And then importantly as well, net interest income, of course, for the quarter, 1.6 billion, just shy of 1.6 billion. That was a 6% increase over the previous quarter. Possibly it's a cost concern. We're still trying to get a grip as to what is pushing and pressuring this stock lower.
These stocks have had a great run.
Anna
was talking about this just a moment ago. The banking sector's had a really good run. It may be just that this is a moment to take some profits on that positioning. You look at Commerzbank as well. What looks like a really solid set of numbers. They're upping their guidance in terms of the NII. That, again, I think it hit a 52-week high coming into these numbers this morning. It may just be as simple as that. Just a bit of profit-taking. You've had a really good run. Let's just lock some of that in.
Yeah, and Joe was pointing us towards a similar sort of... Well, one of the things that's pushed this bank higher, or Dutch stocks higher, has been rethinking by the Dutch government around what they do on certain taxation around trading. So as a result of that, we saw it do OK yesterday. So maybe there's something in that, but it does seem to be a sizable move on the day when markets are broadly higher, up by 0.4%. So but even Commerzbank not making huge gains.
No, precisely. So at 52-week high yesterday, you basically push the stock up into the numbers. You get confirmation of what you already knew largely, which is now priced, and therefore you just take a little bit of profits. There's no... Given the run, is there a catalyst to get the stock to move substantially higher from here, I think is probably maybe the answer to the question.
Yeah, maybe the size of the beat needed to be that much larger, given that it was up, Commerzbank up 35% year to date. You're seeing a gain now of 1.2% on Commerzbank. So it's picking up a little bit.
Depending when we get to those rate cuts from the ECB and how many there are, and the sensitivity of each business, I suppose any positives that are around current performance on net interest income raises questions about how that's sustained into a rate-cutting environment. So that's also going to be on investors' minds, I suppose.
And, of course, you asked the CFO of Commerzbank about the state of the German economy. They have a good touch point, of course. And she said we're starting to see signs of improvement there. And, of course,
it wasn't a ringing endorsement, though,
There isn't a ringing endorsement for the German economy right now.
The situation is improving. It's not as dire as it was. We are basically back to the flat line, but German companies aren't investing here. They're investing abroad. That wasn't that was
an interesting line, wasn't it?
Ringing endorsement. When we start to see German companies investing at home, that is when you start to see maybe the traction really being gained for the German economy. But she didn't sound overly convinced that was going to happen anytime soon.
It was interesting in the iPhone numbers we got yesterday, the chemical sector sounding a little bit brighter, and that has, of course, been an area... We like to talk about the chemical sector when it comes to Germany. It's been an area of weakness, hasn't it? And in particular, that with regards to Russia and its supply of energy.
Reliance on gas for companies like BASF. By the way, talking of, I want to bring it to China, a little touch on China, and then we'll move it to copper because the two tie together. But there was this big Bloomberg scoop coming through, and it hasn't been certified. It's not definitely happening. But they are considering this huge proposal then in China to essentially go out and buy all the unsold homes across the country, which could cost them the equivalent of $1 trillion US dollars.
They become local.
So they would the idea is they refurbish them and sell them as affordable homes within the province. But the pressure comes down on the local governments where they already have massive debt loads. They're going to get cheap credit from the banks, but the banks have already been pressured because they've been lent on to lead or to loan and push out loans at cheap with low interest rates, obviously, and their books are looking challenged. So the debt pile increases, but in the short term, maybe they alleviate some of that pressure.
But it does provide a clearing price for the housing market. So you get a clearing of the housing market, and then you can move on from there.
Yes, it moves the debt from the developers to the state banks. And I mean, I don't know whether that's...
You're basically shuffling the debt around the system, and they're able to do that.
But it starts to get the market moving again, which I think is...
And then if you get a moving real estate market in China, that has implications for commodities, iron ore, arguably steel, copper as well.
Copper has been really interesting because what you've seen is some of the domestic Chinese smelters have been putting copper back onto the market recently, which had been acting as a little bit of a drag. Now, copper's been on an absolutely huge tear, and there was this kind of expectation that would persist. But this squeeze that we're seeing in the United States is fascinating, and cargoes are now being diverted to the United States in order to maybe deal with that front end and the backwardation we've now got on COMEX.
The short squeeze. Well, we've been hearing from Jeff Curry, famed, of course, within the commodity space, Chief Strategy Officer now for Energy Pathways at Carlyle. Let's take a listen on his views, his forecasts around the potential copper price going forward.
I'm confident that this time it's liftoff, and I think we're going to see more momentum behind it because you have three sources of demand this time around, meaning green capex, AI, plus military. Back in 2021, all we had was the green capex demand, and now it's in full force. Supply's not there. Inventories are tight.
OK, Carlyle's Jeff Curry speaking to Bloomberg Surveillance with the forecast that you could see 15,000 on copper. You're currently closing in on, what, 10,200 or so. So there's a short squeeze going on. There's the demand picture, electrification.
But this takes us to the corporate battle that we're seeing being forced over Anglo. Anglo's now talking about splitting itself up, and in some ways it's going to be left with the copper bit that everybody wants. And does that make it a better takeover target now?
Well, it was really interesting because this time yesterday, or an hour and 15 minutes earlier than this, we were sitting looking at these new lines from Anglo American, this defence against takeover that looked exactly like, well, not exactly, but very similar to the things that BHP was going to do with this business if it got hold of it. And so now it boils down to, and one of the executives said this yesterday, it boils down to which management team do you trust most to deliver on the potential of that copper business? And that's essentially the choice that the investors have to make.
It's a challenge, isn't it? And they've come through this restructuring, so we'll see how that plays out. It doesn't seem like other bidders are getting involved right now, like Glencore are sitting this out and watching to see how this unfolds between BHP and Anglo. But to what extent do we tie that into the pricing? And at what point is 15,000 on copper? Do you get demand destruction at that level? At what point does the price become too high?
You may get people switching to aluminium for some of what you can do with copper. So you're always going to see that substitution story.
And how much does it depend on that Chinese housing story that you were talking about? If there is clearing in the market, if they do manage to do that, then do we see any kind of pickup? Maybe a long way from that story developing.
As we see, of course, that excess capacity they have within the electric vehicle space, we know that sucks in a lot of copper as well. So that's a factor, certainly. Now, we are going to be getting more, I think, from the Qatar Economic Forum in the next couple of minutes.
Absolutely. So coming up, we'll be back in Qatar, back in Doha for the Qatar Economic Forum. We'll have Francine Lacroix joined by the Qatari Energy Minister, TotalEnergies CEO and the CEO of ExxonMobil. So we'll bring you that conversation around energy markets shortly. That's next. This is Bloomberg.
$18 minutes into the equity market session this Wednesday, the 15th of May, and European equities are higher for a 9th day in a row. This as we approach the key economic data out of the United States a little bit later on. In terms of the sector story, real estate is up, basic resources up, industrial services are climbing as well. Groceries and luxury seem to be leading the weakness here in Europe this morning. We want to take you back now to the Qatar Economic Forum, where currently Haslinda Amin, our good friend and colleague, is speaking with the Indonesian president-elect. Let's listen.
I'm very confident we can easily achieve 8%, and I am determined to go beyond.
8% within the 5 years, the first year, second year, and when you go beyond, are you looking at double-digit growth?
I would say within 2-3 years, yes.
You talked about downstreaming. What are the other growth drivers for you? Or would downstreaming be key to you achieving 7, 8, 9% growth?
Downstreaming will take several years. What will be a growth driver in the first years will be our concentration on agriculture, food production, food distribution, and energy. We want to go green in a very quick way. We want to produce our diesel from palm oil, and this will be a very strong growth driver. You know, we import $20 billion every year for diesel oil. So can you imagine the savings we will have when we will switch to biofuel?
Indonesia has often said it is open for business. Yet, I think a lot of investors say it's adopted protectionist policies, limits on the export of nickel, coal, palm oil. Is it important for you to move away from nationalistic protectionist policies?
No, I think there's a misperception. We are not protectionist. What we are doing is very logical. Every country in the world will fight or will protect the national core interest of their people. And we think that we want to industrialize, and those are our natural resources. We have to protect our interest in the sense that we must get the full value, right? We cannot keep importing industrial goods all the time. It's not fair to our people. We will not be an advanced industrial society if we are just a producer of raw materials.
I want to touch on your spending plans. When you campaigned, you talked about how you want to provide free lunches, free milk for students, and some are questioning how you will pay for such a program. Can you fund that program if you're unable to perhaps raise the limit of your budget deficit beyond 3%? You've said you can.
We have studied this. We have, what do you call it? We studied all the figures, and we are very confident we can do that. We are very confident we can do that. And
while keeping your budget deficit at 3%?
Yes, 3%. And, you know, the 3% is something arbitrary. Not many countries hold to that. But we have a tradition of prudent fiscal management. I think we have the lowest debt to GDP figure in the world, one of the lowest. And so now I think it's time to be a bit more daring within good governance. So
what does that mean? Raising the limit beyond 3? Would 4, 5% still be comfortable, prudent?
We calculate that it's a matter of refocusing and cutting down the waste, cutting down the allocation to non-essential activities. So it's a matter of efficient, good governance, good administration, good management. And we are going to introduce, and we are in the midst of introducing e-governance. All Indonesian government institution procurement will go through an e-catalog. We will go digitalization, computerization, and this will increase our tax ratio, our revenue services. We will revamp, and yeah, we are very determined to cut down waste. We calculate that we can save a lot of money by cutting down waste, and this will be the growth factor. This will be the growth driver. So we are very confident.
What's also ambitious in moving your capital from Jakarta to Nusantara, a project that will cost you $35 billion. Why is it a worthy cause? Why is it important for you to move the capital?
The idea of moving the capital has been around since the first years of our independence. Our first president, President Sukarno, broached this idea. First, the idea was to put our capital in a more central location. Number two, Jakarta, its surroundings, and Java is very, very highly populated. So the ecological burden of Jakarta is tremendous. We are facing a rise in the ocean. It's around between 5 to 10 centimeters a year. And so we have to build a giant seawall. That's one of my programs also. But moving the capital is one way to bring growth outside Jakarta, outside Java, and also in the next few years, before the giant seawall can be completed, which will take maybe 10, 15 years, our capital is safe from inundation.
Is funding an issue? Because there's been problems in getting foreign funds into the Nusantara project. Will you be reliant on domestic players?
That's Bloomberg's Haslinda Armin there with Indonesia's president-elect. No shortage of ambition, it seems, when it comes to all kinds of policy fronts. Interesting, he says, time for Indonesia to be more daring on spending. We'll watch for reaction to those kinds of lines. Meanwhile, European stocks, guys, then up by 0.3% in terms of stock markets this morning.
Commerzbank bouncing back. We had the discussion about why it wasn't moving. It is now moving. The stock is up by 2.2%. Maybe it took a little while for everybody to get to grips with exactly what was said. Hit a 52-week high yesterday. That trend continues this morning. So Commerzbank on a tear. Merck is the big gainer, though, in Germany this morning. In a few minutes' time, we'll be taking you back to the Qatar Economic Forum, and we'll be discussing energy. That's the big theme next. This is Bloomberg.
This is Markets Today, 30 minutes into our European trading day, and European stocks making decent gains, days and days of gains, it seems, for global stocks. So the Stoxx 600 up by 0.25%. We're waiting for the CPI print. That's the big macro piece of the day that still lies ahead. We've had corporate earnings out, though, from the banking sector. We're busy digesting those. We also had corporate earnings out from Euronext after hours, and we had some interesting conversation with the Euronext CEO moments ago around the listing environment and that impulse that we're seeing from some European businesses to delist in Europe and go to the United States. Let's remind ourselves of what President Macron said to our editor-in-chief at the beginning of the week around that subject.
Total's CEO has talked about moving its primary listing away from France towards New York. Would you be happy with that?
Not at all.
Would you,
and I would be very
stop
surprised.
it?
No, I wait for any confirmation. The US regulation in terms of climate change should be more serious and realigned than the European ones. Second, the Europeans have to invest much more and be more serious and realign themselves on the US.
The French President Emmanuel Macron there on the possibility of TotalEnergies moving a listing to New York. He obviously would not be a fan of such a move, nor would Stéphane Boujnah, I'm sure, who is the CEO of Euronext, who we caught up with earlier on today.
Yeah, he says we're going to make sure that it doesn't happen. We're going to find ways to make sure it doesn't happen. We're going to make sure that the rules are changed maybe to allow more capital to flow into some
US money can get
US
into
money,
these
so
stocks.
US money can go into some of these stocks. But the challenge here is that US money is flowing into US energy stocks at the moment, and the reason for that is partly down to the kind of the strong demand they're seeing over there, big capital returns to shareholders, but also just because the ESG rules maybe make it easier for US investors to park money in energy stocks, whereas they don't over here. There's been the kind of flight from these kinds of stocks from a number of funds because of the rules that have been put in place.
And Stéphane referenced that, didn't he? He acknowledged that was a factor. And, of course, the French president looking at it from a different angle, saying that actually the US needs to catch up with where Europe is in terms of some of those climate rules. And Stéphane also talking then about this wall of money that's sitting, essentially the liquidity, not an issue in Europe, but how you unlock that. To your previous point, Guy.
Yeah.
It's how long you wait
liquidity.
if you're the CEO of someone like Total for those changes to be made, for that liquidity to be released.
And then the other line of conversation that we had with Stéphane, which was really interesting, is around a couple of conflicting impulses in terms of corporates looking to get more money. So on the one hand, there's early signs of IPOs coming back, but on the other hand, private markets offering a competition to public markets in the way that maybe the last time we've seen a pickup in IPOs, we didn't have as the backstory.
It speaks to a bigger picture, which is the fact that if you're in the States, you have multiple sources of financing in a way that you don't maybe over here in Europe. That energy story absolutely front and centre right now at the Qatar Economic Forum. Francine Lacroix has just sat down with a panel of names from the energy sector. You want to listen to this, given our conversation that we've just had. Let's tune in to what Francine is saying.
About when we'll see peak consumption. So, Minister, let me start off with you. Can you give us some of what you see in terms of supply and demand for oil and gas in the next couple of years?
Well, thank you for inviting us all to be here. The main thing that drives demand is economic growth and people growth. So if you look at the expectation of having 1.5 billion to 2 billion people on this earth joining us all here in the next 30 years or so, it means that you're going to need more energy, whether it's for power, you're going to need more petrochemicals for everything that we're using daily in plastics and everything that's related to the petrochemical products that we use every day. So the growth is going to be there, the demand is going to be there. When people talk about transition and having renewable energy, I think renewable energy is going to play a big role with additional solar, additional wind. But because of the intermittency, you're going to need, a backup to have a sustainable power all day long when the sun is not shining or when the wind is not blowing. So the requirement for power from fossil fuels is going to be there and is going to be there for a very long time. And you need to also realize that 1 billion people today don't have basic power that we all enjoy. So we need to also be fair to that population and make sure they have access to reasonably priced power.
We'll talk a little bit then about what's the right way of seeing the transition. But Patrick Pouyanné, TotalEnergies is doing a lot of expanding in LNG products. I'm thinking of Mozambique, I'm thinking of Rio Grande, Papua New Guinea. How do you see the LNG market landscape? Is there a danger that we're in surplus, actually, at the end of the decade or in 15 years?
Today, no. Today, you see even because of the European market becoming an LNG market after the Russian-Ukrainian war, you see that we are in a tense market where, in fact, supplies is even short demand. So tomorrow, we have more projects coming on stream. It's true. You forget Qatar, by the way, in my portfolio, maybe because you wanted me to say that we are together with Qatar in all the projects. Fundamentally, we believe gas is part of the transition. Gas is the best way to make flexible power to complement the intermittency of renewables. Gas is a way to get out of some coal, so replacing. So it's good transition. So there is a market there for gas, for LNG. Of course, it's a commodity, so you don't never match supply and demand. So probably we'll have by 27, 2030 quite a lot of supply. But you know, when there's quite a lot of supply, what is good is when the price is going down, so it attracts new customers. Countries like India, for example, are really looking to building infrastructure for using gas, city gas, distributing gas. So I think it will be a good, after having a peak, which afraid the customers, we will have maybe a softer price, and then it will attract customers, and then we regulate it. So I'm not afraid. I think there is a clear place for the gas in the transition. It's a fossil, but again, it's emit less than others. So let's think to that. And again, like His Excellency said perfectly, we have entered into the electricity business. I can tell you, all my customers in electricity, they want 24/7 electricity. And if I'm giving them only renewables and green, it doesn't work. So you have to match gas plants, gas-fired power plants, and renewables. And this model, we deploy it, for example, in Texas, and it's quite profitable to do it.
Darren Woods, I mean, your take on this? Again, there's a rise in electric vehicles. There's a rise in renewable energy, but consumption will continue rising for energy in general. So how do you see this playing out in the next 5 to 10 years?
Well, I think I'd agree with what both Patrick and His Excellency, the points they've made, that ultimately the demand for energy is being driven by economic growth and people's living standards rising. And there are billions of people around the planet who deserve better lives and are going to require affordable, available, and reliable energy sources. And I think that's the challenge going forward while we continue to see demand. EVs, wind, and solar all play a role, but they also have their limitations. And so I think the challenge for the world going forward is to meet that demand, to meet that criteria, affordable, available, and reliable power, in a way that does it with less emissions. And there's the electron solutions that everyone's been focused on for quite some time. There's also the molecule solutions. Part of it is natural gas and having lower emissions through combustion of natural gas, but it also is with converting natural gas to methane, to hydrogen, and then burning hydrogen with less emissions. It's biofuels, it's capturing the carbon. There's a number of solution sets to address the broader problem statement, which is emissions, while you continue to power economic growth and people's prosperities. As we talk about it in our company, it's an and equation. You don't have to choose between one or the other. The world can do both.
And I want to ask all of you where you think we are in the cycle of the transition. But Minister, Qatar announced plans to expand production capacity to 142 million tons a year by 2030 earlier this year. Do you think you'll expand even further?
Well, when we announced that we were going to expand further, I mean, in the past, we had announced 77 million tons going up to 126 million tons. And we said that we are appraising the field further, and based on technical results of the field and the capability of the field long-term to sustain its production for other projects that we have, we'll assess whether we can do more. And after further appraisal, we found that we can do an additional 16 million tons and going to 142 million tons. And as mentioned by my colleagues, there is going to be need for gas in the future. And if you look at what Qatar is involved with our partners, and in most of the projects, the two gentlemen are with us in partnership, we're going from 77 to 142 in Qatar. And if you count what ExxonMobil and us are doing in Texas, that's an additional 18 million tons. We're more than doubling the Qatar capacity, if you will, or Qatar Energy's involvement in capacity over the next few years. So we think there is a big demand in the future, and we're going to expand to meet that demand. But I think technical capability of doing more in Qatar is going to be assessed in the future. And if there is more, we probably will do more. But also, we're a big explorer around the world, one of the largest holder of exploration blocks in the world, and some with my colleagues here. And if we find gas or oil, we would increase the capacity. We think we're very bullish on the demand going forward. And as mentioned, there is going to be a glut, if you will, of a lot of projects coming, mainly from Qatar and our project in Golden Pass, and some from my colleagues here in Mozambique and other areas. And there is going to be additional demand, but I think if economic growth everybody's trying to get the inflation down and so on. If we have a reasonable economic growth going forward, I think you'll see that all the supply and demand will catch up, and you'll need another phase of development of gas in the 2030 plus. I don't think gas is going away anytime soon, and as evident by what the G7 said, just a year and a half ago or so, that we need more LNG. In the past, they were saying no more gas, no more fossil fuel. Now they're saying that we need more LNG, and a lot of countries are taking a 180-degree turn. Even the EV discussion that people were talking about, you see a lot of people backing off a little bit, I think.
But can I ask you an update on the North Field East? So when are you expecting the first shipment to happen? And do you have any longer-term agreements on that?
North Field East and South are on track. We're in the construction as we speak. All the construction is going very well. The second question was additional sales?
Longer-term agreements, actually.
I think one thing I want to mention is last year in this conference, I was asked by you whether we're going to have difficulty selling additional LNG, if you recall. And one of your nice Bloomberg editors actually came out that same night saying that Qatar is going to have a difficulty selling LNG. I just want to report back to you that since then, we've actually secured 25 million tons of long-term LNG sales. And I can tell you also on this podium that we're signing more this year.
See, it's great to have a yearly update.
Our marketing team is doing a great job.
We should do it, bi-yearly to have every 6 months update.
I don't think there's a problem of selling LNG. Everybody that's buying LNG is stopping in Qatar, and with my colleagues with other projects. I think it's just agreeing on terms and conditions and pricing. That's always the sticking point to finalizing things. But I think there's a huge demand out there, whether it's from Asia or Europe. And I think even Europe is realizing now they have to do something different to secure long-term. They've been very lucky with 2 warm winters.
So, Patrick, how should we look at the global energy transition? Is it taking a back step? Is it parallel? What did we misunderstand 2-3 years ago about how this would develop?
In fact, the word which is important is transition. Things will not happen in a night, like some people are dreaming, because again, some fundamentals is that population is growing, energy demand is growing. And in fact, when you look to what happened, for example, last year, it's true that we invest more and more and more in decarbonized energies, renewables, biofuels, etc. But last year, because the increase of demand on a single year, it covered these additional decarbonized products, only covered 40% of the additional demand in a year. So we are yet to cover with what is energy of today. And so, as I like the expression of Darren, the end equation, we are in a real world today. It's our energy, fossil fuels. We need to continue to produce and never forget that there is a natural decline, not in Qatar, but in many oil fields, There it's growing, it's a natural growth, but it's quite an exception, a natural decline. And so on one side, we have to maintain the existing system, what I call the system A, and of course we have to build and invest more and more in the system B. But we are not yet at a pace to cover the additional yearly demand. So when people tell us we'll have to just keep on one side, no. So the transition is happening, it's serious. Last year we built in the world 550 gigawatts of renewables, but it's still not enough. So it is happening. Innovation is coming, but the EV deployment will take place by 2035, 2040, in not every place. You had just before us the president of Indonesia. You could ask him, for them, the priority is to get people out of poverty. That's the reality. It was his speech. So we need to face that reality. So the transition cannot go at the same pace everywhere in the world. And it was one of the pragmatism statements of COP28. It cannot be every pace everywhere in the world, emerging countries, developed countries. And the developed countries should not impose their views to everybody. And if you say that, yes, it's happening, but it will be gradual, slow, and I would say gradual. Even in our countries, developed countries, because there is a point which is fundamental. It's the affordability of energy. It's so important for the lives of the people. You can see the French, the German farmers, they were angry because we want to increase their price of diesel for their tractors. So we have to keep that in mind. So it's fine-tuning the balance between more sustainability for sure because of climate, but also keeping the affordability and reliability. And that's the equation, which is not an easy one. And I can tell you, I think we are doing our best. We are not, all of us are engaged in a way in different parts of this transition, the molecules, the electrons. It's not a matter, it's different views, and we need all of that. In fact, we need all energies. And so, yes, it will take time, but it does not mean that we not progress. We progress. And then the society, in fact, fundamentally, society means the demand patterns will dictate the pace of the transition. There is a wrong idea that the supply will dictate it. No, that's not, it does not happen like that. Of course, we need to supply, but the society will tell us. And society is also the car manufacturers, there was a big enthusiasm for EV, and suddenly, 2-3 years after, no, today they tell us maybe the customers are a little reluctant to pay 10,000 euro more for a car. Of course they are more reluctant. So that's the pace of it, and that's what transition is clear.
Of course, but there's a lot of tension, Darren, right? Because if we're going to hit the targets, then the transition needs to be sped up. So are we slowing it down again, or is it just a perception?
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investments that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress. I think we've made a big mistake, one, by narrowing the solution set too soon. And we haven't been serious because we've taken out the companies who actually have the best understanding of the system, and frankly, a lot of the capabilities required to transition the system. And so I think a more realistic approach, one that opens the aperture on solution sets, and then one that engages the industries that have the capabilities to contribute effectively.
Minister, do you worry about the LNG market being oversupplied this decade? How quickly could that happen?
I think being if I can just add to what my colleagues were saying on the transition, I think the promises were made, the majority of the promises were made by officials that are politicians, that really don't understand the details of how you can achieve these transitions. And it was driven to a point where it became in vogue, if you will, for everybody to say net zero and environmental and green, and that's what got you elected. And now when reality came in to actually implement the plans that they were talking about in COP26, let's say, okay, 5-6 years later, they're saying we can't achieve what we're talking about. So reality kicks in, and now you're saying that, do you actually back off some of the targets? I think the targets were overstretched targets that you can't reach anyway. So anyway, on LNG supply, I think that there is going to be a need for LNG for a very long time. The European market seems, from officials that you are discussing, I was with Kadri Simpson, with Her Excellency Kadri Simpson, basically the Energy Secretary or Minister of EU, with Darren Woods in Saudi Arabia just a couple of weeks ago on a panel. And the discussion was that they feel they're very comfortable in Europe. And the comfort that they get in Europe is because they had two very warm winters, and they filled up all the storages, and they didn't need to use much of it. So if you have too harsh winters or normal winters, you're going to be depleting. So I think Europe is going to need a lot more LNG, and the world will need much more LNG with the growth, and I don't see an oversupply.
You talked about the frustration of some politicians. I think Patrick Pouyanné is looking at possibly listing in the US. I don't know whether that's frustration with politicians or frustration with the investor base that maybe don't fully understand what you're trying to do. But will you move your listing to the US?
Look, it's quite easy. There is no emotion. It's a question of business. What we observe is that we have more and more US shareholders. Today, we can only offer them ADR, and we want to offer them shares. That's all, because we have more and more US shareholders, and we have less European shareholders, including French shareholders, probably because of all the debate about ESG, etc. That's the reality. And then you see quite a difference of valuation between the US markets and the European market. So it's a fiduciary duty for the board of TotalEnergies to study. So I said we'll study, and then when we have studied, we will come back. And again, it's not a matter of politics, it's a matter of business. And I'm happy to see that all the French politicians want to keep TotalEnergies. By the way, we never said we will leave France. I repeat, we'll stay in France, we'll be listed in France. The question is, can we offer some shares to our US shareholders? That's technical and no matter of emotion. What is more important is the gas, to be honest. And New York, just to tell you the truth.
I mean, the listing is quite important.
No, it's not so important. Because again, the company is in good shape. We are very happy. We have a growth. We are, I could say, in front of the most profitable major last year. So it's sorry for that. But even investing in renewables, so we have a clear strategy. The strategy will not shift, which is more fundamental to me. There is a clear strategy. We are consistent. We will deliver. It's gas. It's electricity. It's oil. That's part of it's energies, TotalEnergies, and that's more important to me.
Our editor-in-chief also spoke to President Macron Monday, who said he wouldn't be happy if you left France. But Darren, would you welcome more listings, even of European-based companies in the US?
Yeah, I think there's a more fundamental issue here, which is the approach that policymakers and politicians around the world are taking to drive the outcomes that they're looking for and the policies they're putting in place to achieve those outcomes. If you look at what's happening in Europe, our perspective, because we have quite a large business in Europe, is the policy being put in place is very prescriptive and very focused on how to achieve an outcome. So you're relying on politicians and policymakers, to His Excellency's point, that don't have a true understanding of how things actually get done within certain industries to prescribe how to then conduct business. That puts a huge burden on the businesses. It makes them very uncompetitive. And on a global market, particularly in the industry that we're engaged in, global markets are liquid all around the world. And in order to compete, you need to have bring as much to bear in that competition as possible. The US, if you take what they're doing in policy making, particularly around climate with the IRA, it's more focused on the outcomes and looking at carbon intensity and encouraging businesses to find ways to meet those outcomes and keeping, at this point, the aperture open around how best to achieve that. That engages the technology firms, that engages the market forces, that engages the companies to find the best solution at the lowest cost to achieve the outcome. That's a much better competitive environment to operate in. I think that's one of the big challenges between the US and Europe, quite frankly.
You look, it works, what Darren said. Look on the methane. When we speak about natural gas, the counter-argument is methane. Since in Glasgow we discovered there is a lot of a question of methane, the industry has taken that seriously, and we are all engaged in clear roadmaps, and we target through net zero methane by 2030, and in Permian, and we have the solution. So if the objective is set, you need to reduce the emissions, even to really strive down the emissions. We are able to do it. We take the challenge and we find a solution. So I think this is a way to interact between the policymaker and our companies. Let's trust each other. Let's not try to regulate. In fact, what is wrong today is to think the transition can only go through regulation. No, it could go also by innovation, trust, and working together.
I think focusing on the outcomes and the outcomes being lower emissions and then engaging the relevant players the best find the path forward to achieving those outcomes are going to get you much faster results at a much lower cost and a much larger scale. And we're demonstrating that today where the policy is right, and we're demonstrating how encumbered businesses can become when the policy is not right.
Minister, does it make a difference when you're looking for a business partner on where they're listed because of
That's Bloomberg's Francine Lacroix with the Qatari Energy Minister, ExxonMobil CEO and the TotalEnergies CEO. Interesting that the Qatari Energy Minister said twice that Europe had benefited from 2 warm winters and maybe shouldn't rely on that in the future when it comes to those LNG contracts. We watch the energy sector.
Potentially higher energy costs coming down the pike towards Europe. How inflationary could that be? Let's fold that into the debate as well. CPI coming up a little bit later. Francine will be back with the pulse shortly. This is Bloomberg.